Hey traders, Christian from Tribeca Trade Group, and a very quick Monday afternoon video. We're going to be coming upon the close here in a couple hours, but just wanted to go over a couple things. Of course, first disclaimer in front of you: everything that we're talking about is for information purposes only. But I decided just to make this a freebie video for the week. I'm going to put this out on my regular Twitter page. But these are the things that we went over. Big checklist. We did a really long weekend video. So if you're not a member, if you're not a member, certainly go ahead and check us out, tribecatradegroup.com. But these are the things that we went over in this Saturday video, and that was about over an hour video that we went through, and just a lot of things to kind of talk about, a lot of things to get excited about, which is why I did a little bit longer than usual video. So let's kind of jump into what's going on, and I think this is kind of why I was getting a little bit, I was getting excited about what we saw on Friday. So if we look at the S&P, and I'll talk about a couple things that we were just talking about in the trading room. There's been a couple comments about volume today, right? And volume is low. Let me just come out real quick and just talk about that in my words, because I was showing some examples. I said I would promise that there are some AAA calls going up. I would promise that I would only give one more example, so maybe I'm lying here a little bit. But in my opinion, and Helene Meisler put this out in her Real Money column as well, and I agree with her completely. So do we want? So this is kind of a little bit of a tricky concept, but it's a little bit counterintuitive. Usually, for the averages, right? You do not want to see, in my opinion, a pickup of volume. Pickup in volumes usually come when they're selling. Right? I know people like to look at volume for confirmation. I think when things are like at a pivot area and so forth, sometimes you want to see that. William O'Neill talks about that in his book, like the Investment Business Daily book. However, take note of how this usually works, right? And if you look at the move, I think you could look at two examples really quickly. That I'm not looking for high volume here. I'm looking for low volume here. So why is that? Why am I looking for low volume? Right? Because if you look back here at the end of the year, this was high volume. December. At the end of December when we saw this big sell-off. If you were looking this whole move up, if you were looking for big volume, you didn't get it until the top. Right? Here's where volume started to change. Right? That was at the end of the move. So why is that? Well, when I was an institutional trader, I'll tell you a quick story, is I just noticed like how hedge funds, how institutions, what they normally do is they leg into positions. They don't say, okay, this is the point I want to go long right up here at 52-week highs, and I'm going to commit a whole bunch of capital on that. That's not how they trade. What they do is they pick spots. They say, okay, I'll buy a little bit here, I'll buy a little bit here, I'll buy a little bit here. They're more strategic with saying I'm going to buy a whole bunch at a 52-week high. That's not how institutions trade. What now when they do now once they accumulate a position over time, once it hits their price target or something's going on in the market, they want out and they want out right away. And you see a big bunch of volume in the stock. That is them exiting, right? So that's how institutions trade, and that's my firsthand experience trading for hedge funds, is that they will accumulate a position over time. They don't jump in at 52-week highs and say, okay, we're clearing resistance, I'm in. It doesn't work that way. So here's this move, right? You could see that it's all low volume. So if you were looking for high volume, you missed this whole move from the end of December to this rip all the way through April. Here's where the volume came. Similarly, if you want to zoom in over here, notice this leg up. Maybe so again on turns, market pivots, you could see the volume confirming that, right? On the turn. Notice on the whole swing, there's not much volume. Maybe a couple days in here. On this one, this was nice. So that kind of, if you wanted to say that one, that was not bad. There was a little bit of a pickup in volume. But for this whole swing higher, there's no volume. Where did the volume come in? When they started selling. So in my opinion, it's nice to see a little bit of confirmation, right? And I'm seeing that in some groups of stocks, but it doesn't have you don't have to see that. Remember, the turn happened here, and you could see the volume on the turn. Not This is continuation. So again, we're getting outside of resistance, but that's not a turn. So again, big difference. Here was the turn back in October, and you could see the volume confirming it then. If you were looking for that on the turn, but you don't need volume up here. That's if we were to see high volume like tomorrow or something, that would tell me funds are selling. They're getting rid of the positions that they were accumulating in here. All right. So again, very important. So let's look under the hood a minute. One of the things that really has kind of kept me in the camp of being bullish, and why we were seeing a lot more home. I was doing a lot of homework last week to kind of confirm that I was seeing a lot of bullish setups in different areas like industrials and financials, much more ahead of most. Who I saw a lot of people looking for bearish setups last week. So I'm sorry, I'm giving myself a little bit of a pat on the back, but I'm proud of that. So what do we got for today? IWM is leading. That's a good thing. Keep in mind, IWM, it's been a pretty decent swing up here. If you look at the hourly chart, we did take out this virgin point of control. So I would not be adding risk in small caps with this VPOC. And you could see how well this has worked. So again, the valuary is really kind of giving us a sense of where I want to, where things turned versus where I don't really want to be adding risk after this swing. Up here, I want to be riding trades at this point, and then kind of looking for little pullbacks. And maybe we get that with the Fed on Wednesday, but any type of hesitations. But I'm really liking. So again, this is just small caps. I think for momentarily we might see some digestion. I could be wrong. If we jump over 157, then we could start to look at things on the daily chart and possibly, we have seen this before where you get one direction down, false breakdown, and then we actually do one of these. So I would think that we need to clear this. We're going to be coming upon resistance here in IWM. A longer way for IWM to break out versus SPY. So I think these things, and if you look under the hood in SPY, which again is a different animal than small caps, still this is a pretty mature swing, but I think that we can continue to go higher here. And the reason why is I'm just seeing a lot. I've continued to see a lot of sectors perform. It's not, we don't have narrow breadth. We've had very good breadth. We've had very good market breadth. So, things like metals and mining, Chinese internets, biotechs, healthcare stocks, steel names are doing well. And if you look at what is underperforming, well, keep in mind energy stocks were the biggest underperformers. I'm sorry, energy stocks were the biggest outperformers last week. So they're taking a breather. Oil is down today. So you don't have everything going. But what I really like is this going on. Right, TLT is down 90 basis points. Right, it tells me that they're losing their shine. It looks like bonds are somewhat breaking down. Right, we talked about this in the weekend video to see if we would break the October valuary. So not only are we under all the moving averages at this point, short-term moving averages, 200 is down here, but we're also below value. Right, so there's going to be a continued rotation. If you look at regional banks, which I think, any type of dip in regional banks with yields going higher is pretty interesting. And then and then also, look at what we talked about home builders last week hitting this virgin point of control, just like with IWM, saying that was a good place to take profits. And you can see this is one of the worst performing groups, right? So I'm going to start looking at some names for earnings. Of course, some names are going to run into earnings like this. It's tough. It's tough to play with options because options, the prices are going to be super high because of the event. So the premium is going to be much more than it normally is. What I was looking to do is sell a put spread in Google. So really interesting the move that it's making today going into earnings. Keep in mind, look ahead a couple days. A name that does pretty well on earnings. What's the short interest of Match? This might be a trade that I'm looking to kind of position with ahead of time. because some names will absolutely make their move before they actually report earnings. Like Apple's going to report this week. I don't think I'll be getting long Apple for earnings because it's already kind of made the move. What's so that reports 11.5 for match. The short interest, you want is high. Short interest is 54. I can't believe that that's right. 54% of the float. So that's a name that we might see short covering into. So I'll be positioning probably in this one. It also now if it doesn't work, if you look at the earnings history, it's very good for Match.com. You could see here in the green. So I think that's one name that I'm looking to position ahead of time. I'm going to look at Akamai as well, which reports today after the close, and a couple other names. Again, I would really like to participate in Google. I was talking with somebody this weekend about a trade that I liked, but it's running really hard into earnings. So it will probably be a little bit of a smaller trade. I mentioned healthcare. Pfizer reports, we're seeing a lot of names in this group, right? Really beaten down. Pfizer doesn't typically move a lot, but I like the risk to reward. And I never put too much into call buying the day of earnings. I like to see positioning like a week ahead of earnings. I don't know what they're doing with these. They did not go up against shares. I don't know. I mean, that's pretty big position. Usually, it's somebody substituting out of stock and going into calls, but I can't confirm that. I don't see any shares like similar size blocks going up there. But now, regardless, I think for an earnings trade, the implied move is what, like 2 or 3% for Pfizer. Let me just calculate that. I bought some of the 37.5 calls that expire this week for about 41 cents. I think that's really good risk to reward. If they happen to say anything positive, you should see a nice bounce in the stock. Again, it typically doesn't do that. Yeah, it's implying a 3% move, which is really low. All right, look at that. Nice block of Gilead. All right, so I'm going to leave it there, guys. But again, I like everything that I'm seeing. Besides volume, if volume picks up, I would be worried. I would also be worried if market breadth doesn't continue. Market breadth has been super, super strong, which has been a great indicator, a great internal to look at. If this tends to break down at any time, I mean, look at the advanced decline line breaking out to highs here, right? That's confirming. If we start to see that back off as we break to new highs, that's not what we want to see. But I don't think we're doing that today. All right, guys. But those are some things to watch going forward. Have a great rest of your afternoon, and I'll be looking at some earnings plays